So another very interesting company, and this is a MNC that we're talking about, but in the auto ancillary space, Carraro India is open for public subscription today. It's an Italian company. It's a 100% owned sort of MNC, and it's a complete OFS by Carraro International, the Italian entity, in the Indian entity. So they've raised about 375 crores from the anchor investors already. We have David Grossi, a Chief Financial Officer and whole-time Director, and Balaji Gopalan, Managing Director at Carraro India, are joining in to take some questions. Gentlemen, great to have both of you here. Thank you very much for your time. Prashant, this side. Balaji, if I can start with you, the money that is being raised, I mean, first up, a basic question, what is it going to be it's a complete OFS, so it goes to the parent, right? What's the basic underlying motivation to do this? It's an Italian MNC making it to the Indian bourses. First thoughts, Balaji.
Yes, thank you very much. Very good morning to all of you. Thank you for giving us this opportunity. We are very excited about what is going to happen now. It's a new chapter in the history and legacy of Carraro Group and Carraro India. We will be the first country or the subsidiary of Carraro Group to get listed outside Italy, and it's a very proud moment for us. And we are very thankful to the Indian market and the environment here, which is encouraging the shareholders to look at India in a big way. The reason why we are going in for this IPO is Carraro is a technology company. We provide differentiated solutions for the transmission industry in agriculture and construction vehicles. And we have consolidated ourselves in the last 3 decades, and we are seeing a very clear movement that is happening from the two-wheel drive technology to a higher technology in tractors and introduction of specialized vehicles in the construction sector. And this is where Carraro has the legacy of 90 years of presence in global geographies and aware of the global soil conditions. So we are able to provide our OEMs, our customers, with the right product solution and the right technology that is required in India, mainly in agriculture, because food security has become a big
Balaji,
concern.
If I can, allow me to come in. No, that's very well put. I mean, just a basic introduction. So let's just talk about tractors, right? Which is the primary, the big sort of revenue stream for you. And as you said, you're in the four-wheel segment within tractors.
Yes.
Just break it down for our viewers. The market size right now. How many tractors? I think a little over 10 lakh tractors are sold every year in the country. Yes. How many are four-wheel, which is where you are operating in? Yes. How fast is that segment growing? What, as a percentage of the cost of the tractor, the transmission that you provide, the transmission gear that you provide, what is that in value terms? And how is that growing? Go on.
Got it. So as you rightly pointed out, the Indian tractor market is roughly 1 million, 10 lakhs. And today, the penetration of or the migration from two-wheel drive to four-wheel drive has reached roughly between 16 to 18% as per market research. And this growth absorption is happening quite fast, I would say, because if we take a data of about 6 years back, it would hardly be 2-3%. So in the last 5 years or so, there has been an uptake and absorption of this four-wheel drive technology. And what is more important for all the investors and for you as well is to understand that globally in developed countries like US and European Union, the four-wheel drive market is upward of 96-97%. So India is still at a very latent stage in absorbing this, and we have a long way to go. And to answer your question specifically, currently the four-wheel drive market has reached roughly about 17%, number one. Okay. Number two, your question about what is the
value.
The differential, I think, in the pricing is what you were asking.
The value.
Two-wheel drive.
No. The value. In the four-wheel segment, how much does a tractor cost, and what is the value that you provide? I mean, the kit, the transmission
so
gear.
we are a mission critical supplier because our products which go into the tractor constitute between 20 to 30% of the cost of the vehicle. So if you take a 10 lakh rupee tractor, which is roughly a 50 horsepower tractor, a four-wheel drive versus a two-wheel drive, the differential should be between anywhere around 70,000 to 90,000, 95,000, depending on which configuration of the four-wheel drive you will be using. So that is the price range that is the differential between two-wheel drive and four-wheel drive.
All right. Hi, gentlemen. Good morning and good to see you, Vin. This is Nigel on this side. Since it's an entire OFS, I'll want to understand what is the current capacity utilization levels you're functioning at. I think you're doing roughly around 1,800 crores of revenues. So what is the utilization levels? What is the debt in your books? And how do you all fund the further expansion from here on? 3 numbers.
Okay. Coming first to the utilization, our plant utilization currently is between 82 to 85%, considering the gear plant and our assembly plant. And in an industry that we are working on, this kind of capacity is sufficient to cater to our needs because we need to also keep a buffer. So I would say we are more or less quite well utilized and quite efficient in our operations, and any further increase in our revenues will require some amount of investment to happen.
Okay, all
and
right.
Pertaining to the financial aspect, I would double click on Davide Gulick to Davide Grossi to please come in.
Coming across to you, David, take it.
Yeah, of course. So in terms of debt, today we have a net financial position of roughly 100 crores, 10 to 12 million euro, and a debt equity ratio which is lower than 0.5x. So we believe a level of debt which is
okay, all right. So we got that 100 crores odd is what
future growth.
Yeah.
Sorry?
Yeah, please go ahead. The line just snapped there. Please go ahead.
Okay. In terms of future growth, future expansion, according to our plans, whatever will come in the future as of now is manageable with our internal accruals, with our internal cash flow generation. So we do not see, we didn't see any need to, maintain part of the proceeds here in India.
So this is 100 crores of net debt as of now. You're functioning at around 80-82% capacity utilization levels. Just one more point I wanted to understand. What is the asset turn for y'all? If you'll put in 100 crores, how much of revenues can y'all generate?
Usually twice as much.
Twice. Got it. And just one more question. Since it's you have an international parent, as of now, I understand there is no royalty that is paid. Is that correct?
We pay a small royalty, which is for the brand utilization.
Okay, what is that amount, sir?
We pay a small royalty to our parents for utilization of the Carraro name. It's a brand royalty. Okay,
what is the percentage? The current percentage? What percent of revenues do you all pay as royalty?
I think there is a line disconnect between you and
Balaji, why don't you take it?
Yeah.
What's the royalty percentage?
See, there are two royalties. One is the product royalty, engineering royalty, which is zero because they have transferred 153 IPs already into Carraro India. Hence, we don't have to pay any royalty for the product. However, in the past and in the present and future as well, we have to pay a small brand royalty, which is roughly between 0.3% to 0.4%.
Okay, and on this product royalty, which is zero, earlier there was an amount, but currently it is zero. Any plans of restarting the product royalty, or it will not come back? Because post-listing, your shareholders will want to understand what is the vision with regard to this royalty. So any plans on restarting the product royalty, and on the brand royalty, will it stay in this vicinity of around 0.3%, or is there an upside risk?
No, first of all, answering the brand royalty, which is applicable, it will remain in that zone. We have never gone beyond that decimal of 0.3 or 0.4, and it will continue. Historically, it has been the same. Now, coming to the other question of whether the product royalty, engineering royalty can kick in again and there is a reversal, I would like to assure you, not just as an assurance, but the very fact that 153 IPs have already been transferred and bought by Carraro India, there is no question of paying any royalty to anybody because the IP is now owned by Carraro India.
Got
All
it.
right, now got that. David, just one last question to you. So the the parent is selling shares to Indian investors. Will this be it for now, or should we expect more sales, or no plans as of now?
As of now, no plan. This is the range of dilution that we were planning. But of course, now we are diluting around 30%, which means that we keep a door open for the future. Never say never. But as of now, this is not the plan.
Okay, that sounded like you said keep the door open, but no immediate plans. Nothing has been discussed.
No.
In any case, let me come in here. It's important to understand that Carraro is a global company and it wants to penetrate into India and make India one of the largest operations of Carraro Group. So keeping that in mind, we have strengthened our operations over here. So the concept of dilution is not there in the horizon as of now. But what Mr. Davide meant was you can't say no to something, but it's just a hypothetical situation that something can happen in future. But as of now, in the next couple of years in the business plan, we have no such plans of getting into further dilution in the market.
All right, Balaji,
we will
thank you very much.
Consolidate and grow. Yeah.
Thank you very much for joining us, Balaji. David, thank you very much for joining us. Great chat. We had more questions, but out of time, and we'll continue and pick up on this when you make it to the market in terms of the listing itself. So the IPO, of course, opening today. So that's a primary market action.